just reaching out to you again. I just wanted to do a little more clarification on the 50-year loan option. Uh, it is understandable that some people will need to opt into the 50-year option because of the affordability factor. But there are some people who will in turn try to buy more house than needed just because they can afford the payment. But the big thing in home ownership is building equity. It's being able to make your house payment over time and then you build equity. Typically, whenever you go to sell your home, you would have some equity in your home and you might have $20,000 saved and then $30,000 of equity in your home. That combined would give you $50,000 to go towards the next house to cover your expenses. In the option of doing a 50-year mortgage, you would build that equity at a much slower rate. So average people live in a house 5 to 7 years. So running those numbers, if somebody had a 50-year mortgage on the house, yes, their payment would be a little bit lower, but that equity would be after 5 years. They would have only paid down the principal $6,400. So you would only have $6,400 of equity after 5 years. In a 30-year mortgage, you would have $24,000 of equity. Now, of course, you can factor in how much is the home worth now more than you paid for it. That's additional equity. But then your principal on your loan would have only gone down $6,400 on a 50-year loan. If you jump that up to 7 years, you would have, on a 50-year loan, you would have only dropped the principal $9,600. On a 30-year loan, you would have dropped the principal $36,000. So in that case, if you saved $30,000, you would have $66,000 if you had a 30-year mortgage. If you had a 50-year mortgage, you would only have $39,000. If we go out to 10-year period, on a 50-year mortgage, you would have reduced the principal by $15,000. On a 30-year mortgage, you would reduce the principal by $57,000. So if you save $30,000, you would then have $87,000 on a 30-year mortgage. But in the same time frame, you would only have $45,000 with the 50-year mortgage. So there again, the 50-year mortgage may be something that someone needs to do in order to purchase a home. But just understand, when you go to sell that home, the principal that you would be building up, the equity, is not going to be as fast with a 50-year mortgage versus a 30-year mortgage. It's all about helping you and helping you make wise decisions, not waste your money. And certainly paying that off in 50 years is definitely not the goal. You guys